Hey, thank you so much for joining us. This is Michael Chu, and I have a good friend, Joe Siau. And How we met is, I went to a seminar on luxury home, and Joe actually was introduced on the spot, basically being a lender who helped a luxury buyer close a deal. And I was so impressed with him. And I was, we had contact information, and we kept in touch over the last few months. And He's going to tell you all about his recent book a little bit later. But let's get started on luxury home financing. And Joe, maybe you can talk about yourself a little bit. I want to ask you a few questions along that.
Okay, thank you very much, Mike. It's also a pleasure meeting you, and I've learned a lot from our friendship already. So thank you in advance. So I've been in the mortgage business for about 27 years as a certified mortgage advisor and also as a certified divorce lending professional. And through the course of working with banks and as a broker and as a direct lender, there's a lot of challenges in this marketplace with interest rate going much higher in this market.
Mhm.
But first things first, as a consumer, as a home buyer, or someone that's kind of checking out the market, you probably have some questions on what it takes to buy a home, first of all. So maybe we just start by answering some of your questions and then go ahead and, we can probably address a little bit more and get more better acquainted in the future.
All right. So, first question. I know I asked this before we started, but before this one, I had another question that came to mind, and which was, normally for home to be called luxury, I saw somewhere that it has to be like three times more of normal price or average price in a city or in the area. So I'll use Fremont as an example. We are about $1.5 million as a median price, which means it's about, 4.5 or $5 million and more, and that would be considered a luxury home. Now, my question, kind of coming into mind is for luxury home buyer, is the is there any difference between that type of financing versus like let's say average home buying financing? I mean, I'm very familiar with how the lending goes for regular home, $1.5
Mhm.
million dollars or so. But what if it's a luxury one? What are some of the major differences that you see, and what are some of the special things that you may have to do?
Yeah, we'll probably cover that a little bit later as well.
Ah,
Okay,
okay.
Michael. But at the same time, to answer your questions up front, typically on the real estate side is a marketing term. On the financing side, then what we're talking about on guideline wise, it's probably somewhere around 5 million on and above, or to some of us who are actually working the market, is probably 10 million on and above. Um, and with that category of financing, that's the maximum loan amount, 5 million on up or 10 million on up, requires at least 35% down.
Mm.
So you basically take 10 million and divide by 30 by 65%, and the purchase price will probably be around 16, 17 million dollars for the purchase price to be called a luxury home in some markets, like down in Newport Beach, or maybe up here in this area, somewhere around 8 million purchase price to have a $5 million loan to be considered somewhat of a higher jumbo loan amount.
Okay, great. That's a great start.
Okay.
Other questions I had was if a luxury home buyer wants to approach in buying a luxury home, what are some of the things that they should like accumulate? I know for regular ones, it's really the W-2 and your bank statement. Are there any other things in the luxury category that, kind of, so the question really is there a cheat sheet or a checklist, and how do you assess buyer is in position to actually acquire the luxury home?
Okay. Um, well, from the get-go, financing, it's not a mystery, but in terms of buying, typically any lenders will require W-2,
Hmm.
pay stubs, and proof of supplemental income, 2 years tax returns, bank statements, investment account, and knowing your mortgage statement, taxes and insurance applicable, driver license, and where you live for the last 2 years.
Hmm.
So that's typically what a lender would like to see.
Hmm.
But when you're trying to buy a luxury home, most likely you are not a W-2 worker. Most likely you probably own a business or several
Right.
businesses. So that gets a little technical because then we would need like 2 years of your corporate returns and also 2 years of your LLCs and 2 years of your K1s. And most of the time, a luxury buyer may not have filed their tax returns because they filed an extension. So we
Uh-huh.
have to go back maybe 3 years, and then we also have to run a lot of analysis just to see if the income has been declining or has been meets the liquidity ratio analysis, and or if there's any passive income that cannot be counted, and or if there are tax losses that cannot be counted, and or if the person has already paid the income tax due or not, because taxes must be paid at the time of closing. So there's a lot of extra steps that we have to take a look, and that's also before looking at the guideline, whether based on the credit scores, they can or cannot afford this property that they're anticipating to purchase. And but for some high net worth individual, then they're looking for using restricted stock options to qualify for a down payment. So we also have to look into those criteria and see if the stock restriction options are usable and as a reserve versus using as a down payment. So just a lot of questions back and forth in order to solidify what the exact purchase price is allowable for this borrower.
Mm. So it sounds like it is actually more complicated than let's say, a typical home purchase because there's so many more variables that could be in the financing. So maybe we'll cover this later, but oh, okay. So this one is really the core of that question. It's like the whole list of all these things. It's really to show that buyer has ability to buy. So what are some of the typical like close cycle? I mean, for a regular loan, we're more used to like 30 days, 45 days. Are there like 34 or 45 days being too short for this type of close, or do you have to like extra time to work on all the extra documents?
Okay. Um, for a typical transaction, we might be able to close in about maybe 14 days sometimes.
Hmm.
But for a jumbo, super jumbo or luxury home, anticipating if someone is self-employed, it probably takes about good 60 days to close.
Uh,
Sometimes 45 is less complicated.
mhm.
Um, it, it, it's so natural for a person applying for a loan just to throw out a number and say, "Oh, Mr. Loan Officer, I make $250,000. How much can I afford to buy?"
It's not
sometimes
that
it,
simple.
I know sometimes it catches us off guard. So just to go down the checklist, right? We just went through this. We have to look at your current mortgage payment, and your current mortgage payment include taxes, insurance, your car payment, credit cards, um, student loan payment, plus your new mortgage payment with the taxes, insurance, and the fluctuating daily mortgage interest rate.
Hmm.
So if that's your debt, that will have to count towards your debt to income ratio. What's your income? Are you W-2 income? Do you have overtime? Do you have bonuses? And if you do, we have to average those out for 2 years. If you're only self-employed, we have to look at your net profit. If you run several corporations, do you have losses or income? And we average it out
Okay.
for over 2 years. Do you have rental properties? And we also look at 2 years average for exact rental income with exact expenses received and or paid, not from what you listed as your lease agreement. If you list your lease agreement as 5,000 a month, but you're only showing, over the course of a year, only $40,000 in rent received, we count 40,000, not what's on your lease. So based on that, we want to achieve as what we call debt to income ratio at no more than 43%. So 43%, is what is optimum for jumbo buyers. Sometimes it's 50%. For non-QM, it might be 50%. And sometimes for FHA, it's 55. For VA, might be 60. For some of the conventional loan, yes, we also go to 50% as well. So just based on a lot of math, because your credit card payments might be different. If you have collection account, that might be different. Your income, if you're a corporate, the business owner might be different. If you're self-employed, it might be different. So
Mm,
how do you achieve the 45% or 50% debt to income ratio? Well, I'm the one that will crunch all the numbers for you so that you don't have to.
mm,
So instead of coming to a table and trying to figure out all this yourself, which might take you time, we can do it much faster, sometimes within 4 hours, and you'll know. Um, then on the other side, how do you determine if you're able to buy or not? Well, we have to look at if you have assets, money for your down payment. And if the money is seasoned, if it's in your account for 2 months or not, because if it's not in your bank account, we cannot use it. Um, so that funds might be from your savings, from your checking, from your brokerage account. Now, then, of course, a lot of people from overseas might be coming and they might have questions about their ability to borrow or not, and we'll cover that
yeah,
next. But in this scenario, funds for down payment can be a gift in most cases. So gift is not a loan. So meaning that it's just someone signing a gift letter and saying that they will give the money to you at closing. It's not about, okay, I'm gonna give you some money, but you have to repay me. And
right.
so we're gonna put it as a mortgage note as a 8% interest rate or 6% interest rate. It's not that, because once you have a mortgage note or a loan, then it ties to extra payment, which may disqualify you for trying to buy a home. Now, is it all that easy? No, because you still have to look at credit scores. Because if you're 740 credit score, great. If not, if it's less than 700, we'll probably do free credit rescoring for you to raise your credit scores higher so you have a lower
Mm,
interest rate. And in a jumbo category, every every points matters, because sometimes you get a much better rate at 760 FICO or 780 FICO than you do if you only have 760,
mm,
if you're going full dot. Now, some people looking at this checklist might say, oh, this is so easy. I'm going to be a lender myself, or I'm going to do my own loan. There's always ways to do my own loans, right? And get better rate. But no, it isn't, because a lot of folks not understanding that there's occupancy issues, there's
uh-huh,
appraisal issues, there's guideline issues, there's title issues, missing documentations, and the varying interest rate may play a part into how much you can qualify based on pre-approval. And then at the time that your file is finished, can you get the loan through and to get the home that you want at the time the closing that you want? So there's a lot of variables, and we can crunch the numbers for you on that.
yeah. I do have one more question along
Okay.
this line. So normally, like when I talk about lenders, it would be like in general, the bank people, right? So they
Mhm.
do large bank lending, and then there's like loan brokers who taps into like all the various investors and get the loan out to the consumer. When you talk about all these, is your investor, or do you go to institution for money? Where does this very large loan come from? I mean,
Okay.
there are like millions.
Yeah, I basically maybe have the best of both worlds. I am a direct lender,
Uh,
and I'm also a broker. So when we don't have in-house products, I have access to a lot of banks and credit unions that we can look at and shop around for better rates for you, or better terms for you, or going stated income for you. A lot of banks, they do not do stated income, and I do a lot of stated income and or
uh,
bridge loans as well.
okay, great. That sounds like great answer. Okay, so I did have the thought about like, hey, give me a case like some people approach you and they had this situation, and how did they like close? Was there any issues in between? Maybe just kind of give us a brief example.
Okay, I'll probably give you three examples here. First
Three.
one, Yeah, first one might be a buyer who wants to buy $2 million home in Santa Barbara.
Hmm.
Okay, and they're not sure if they can buy before selling the home. So, and of course, they want the lowest rates. And when they really don't qualify, from my opinion, right out of the gate, right?
Hmm.
$250,000 income, 45% for jumbo debt to income ratio equals $9,375 for all the payments under a full doc loan.
Hmm.
So if you're at $9,300 per month maximum for all your debt, well, the difference is $250,000 at 50% debt to income ratio will allow you to qualify with 10,400 for all your payments.
Hmm.
So if their payment right now is $3,000 on the departure residence and the new property is $6,900, they require to go to a $9,900 payment, and they can only get about $600,000 loan. So that means that they will have to put a $1.4 million for down. Okay,
Hmm.
can they qualify? Well, if she's a nurse at Kaiser, she works
Oh,
part
that's
time
pretty
for
tough.
20 years, right?
Yeah.
And she works part time for 20 years.
Uh-huh.
Okay, and her husband is self employed, maybe with declining income. Don't know. We have not seen the tax returns. Well, they have $500,000 for their own money for down payment. Well, and they're going to potentially get $900,000 gift
Wow.
from family.
Okay.
Will they get it? Can they get it? We don't know. And at the end of the day, would they be happy with this payment or not?
Hmm.
So challenge is employment is in Sacramento, not in Santa Barbara. So the occupancy by an
Oh,
underwriter might be, well, if you don't have
we'll question
employment
that.
down in Santa Barbara, you might have to buy this as an investment property or as a
Hmm.
second home.
Yeah.
Okay. Well, you can't purchase owner occupy. Well, have you filed? Do you have tax returns that we can look at, make sure that your husband's self-employed income is not declining. Okay, we have not reviewed the rental property if it's taking in income or losses, and
Hmm.
they also have land which has tax payment expenses. So with additional expenses, credit card expenses, and car payment expenses, most likely they may not even qualify for $600,000 loan. So my proposal to them is, hey, why not consider a bridge loan? And at the worst case scenario, it's about maybe 7.95 interest rate, stated income, 1.5 points, no doc, instead of a conforming loan, which might be
Hmm.
7.5% full doc, and you won't qualify. So please send me all your paperwork. I'll check through it in the next 4 hours and let you know if it's doable based on a bridge loan or based on fully qualifying you on a full doc loan that you have a lower interest rate. But to what end, if you cannot qualify, if you don't have a job in Santa Barbara, can we make it work or not?
Hmm.
So a lot of people make assumptions. I make money. Bank should give me money. Well, the bank follow the same guidelines, same standard for every borrower without discrimination. So, it's not that you don't have money. It's not that you don't have good credit score. It's how do we put it in a box, package it so that when Wall Street gets your loan package, it looks exactly same with all the other borrower in the same tranche that's being sold to pension funds and retirement funds, that there, won't be a loan callback and there's no penalties and it's not perceived as discriminating one borrower against the other borrower.
I suppose just listening to this one case, it's kind of like, wow, whoever that's realtor on this case needs to understand your viewpoint as well, because,
Mhm.
these things are always more complicated.
Uh-huh.
And if they don't understand, they would be very frustrated.
Yes, you and me both. So that's why it's better to work with a licensed and seasoned loan officer
Yeah.
versus someone from internet bank sometimes, or
Okay. So I had another question, of course, with these cases, what if the buyer is actually international and you had a list of all these things that, you look at to qualify them for a loan. And if they don't have this, don't have that, how do we handle some of these cases?
Well, believe it or not, for international buyers, they're probably easier than it is for
Oh,
a
really?
U.S. buyer,
Wow.
because we now have investors that we can broker to,
Oh,
um, that do foreign national program, because investors are looking at high return on the money. They
uh,
don't care. as the bank cares. So the
Uh,
banks, they want credit score, they want tax
right.
returns. Well, investor, guess what? If you put 30% down, you must not have a US Social Security number because we don't want to have your credit report. If
Mm.
you have a US Social Security number, you kind of fall under the banking guideline in
Uh,
US. If you don't have a Social Security number, you're from overseas,
uh-huh.
you put 30% down because you're from overseas, you don't have established credit in US, perfect. Those are the people we want to lend to.
All right.
So they will write up, right, they will write up the property as an investment property, okay, non-owner occupied,
Okay.
okay. You use your passport to qualify
Mm.
and you show us how much money you have in your bank, and that's it. So how we're going to qualify you for a loan is, well, if you have to identify a property, we would look at the cash flow on the property as a rental property. We would do a debt service coverage ratio analysis,
Mm-hmm.
and that basically means we put the PITI,
Mm-hmm.
the principal, interest, taxes, insurance, and the HOA payment on the top as a numerator, and we put the rent on the bottom.
Mm.
If it's 150%, yeah, you'll get the loan. That's
Wow.
about how easy it is.
Uh-huh.
If it doesn't meet that potential debt service coverage ratio, then you don't get the loan. Okay. Well, does it matter if borrower just arrived in US and this was a scenario. I have a borrower that tried come to me with this question and they don't qualify because of these concerns and challenges. Does it matter if a borrower just arrived in US less than 1 year ago on an EB-5 visa or I-551 visa?
Uh-huh.
Well, they have to produce for me the visa. If they can produce for me the visa, then I can underwrite it maybe based on US traditional guidelines.
Mm-hmm.
But because they are already in the United States, sometimes that presents a challenge because they have a social security number already.
Mm.
Because if they
Right.
have a social security number, this is not the program for them. I have other programs for them. Okay. And then they're telling me, okay, she's waiting for a green card in a month. Well, if they get a green card in a month, most likely they have a tax ID number. And if they have a tax ID number, again, I can't do a loan under this program for them. Okay, so there's a lot of boxes. We need to know a little more details. And they're asking, well, if I get this loan, would it affect my green card prior to closing? Well, yeah. I mean, if you have a residency in US, then you're going to the residence program, not this foreign national program. So it goes back and forth. People want it one way. We have to put them in a box a different way. Then they qualify. So which box can we put them in so that
I
they
see.
don't have to document their income? They don't have to pull the credit report. They can buy rental property and they
Yeah.
qualify. So that's
So
where
it
we're
sounds
one
like they
hat
should
in the
start, even before their green card application is ongoing
correct.
or pending to come out, right?
Yeah.
They should
Uh-huh.
they should go with this program and just qualify, get a property, and then get the green card.
Yeah. So
I
it
see.
makes doing things a little bit backwards sometimes, but we try to present a lot more education up front so that
Uh-huh.
people are a little more educated, going down the right path
Wow.
without going back and forth because it's frustrating for both parties.
Yeah. I can see I can see on this type of financing there could be like things just come out everywhere. So
Mhm.
which leads to that next question. What are some of the challenges putting things together and put them through the close?
Well, interesting that you ask, and I put this slide together because a lot of folks don't understand the luxury market in this climate because it might be the price might be coming down a little bit, and
Hmm.
if it does, how do you solve that problem? This was one of my closing in Newport Coast recently, and what happened was the appraisal was supposed to be $25 million.
Mm.
It came in 3 million less
Wow.
than the appraisal value. Actually, well, we had to do two appraisal reports. So two appraisal report, one came in 3 million less, one actually came in 4 million less than anticipated price.
Wow.
Okay, so if the anticipated 65% of $25 million financing, the borrower was expecting about $15 million in cash out to pay off his first and second. Now, with $22 million, the bank was only willing to do 11.5 million on the first.
Hmm.
Well, the deal was gone. There was no way to put this deal together
Right.
except for Joe Siau. Okay. So this was like one of the most the borrower does not file US income tax returns.
Uh-huh.
The borrower has businesses overseas.
Okay.
All the money and all the income taxes was a report from overseas.
Mm.
And there's virtually no loans in US that would do
Just tell me
that.
the result. Did you actually close on this one?
I close on this. Yeah.
Woohoo!
Yeah. Yes.
Come talk to
So,
Joe.
yeah. So this was a stated income loan.
Okay.
Okay. Um, they were also in there was a lot of credit challenge. So we actually had to remove one of the borrower from the application and start a brand new loan application in order to have the higher score to qualify for a stated income loan. We closed the loan at 4.75% interest rate,
Mm.
saved the borrower $20,000 a month because they had two loans that were a much higher interest rate. And they were able to pull out about $2 million in cash out, save $20,000 a month.
Wow.
And the proposition was also instead of 11.5 million on the first, which was not able to pay off the second, we got a second mortgage lender that were able to do 3 million on the second lien. But think of yourself, if you were a bank, would you actually put $3 million behind $11.5 million first? And all the lenders typically say no, because that
Yeah.
means I had to have a lot of cash behind my bank in case someone defaults and not make a mortgage payment. I have 11.5 million to take over on
Yeah.
the
Nobody
first.
wants junior loan position anyway.
Exactly, on the
Yeah.
luxury home market. So I picked up the phone. I'm one of those problem solver. I probably call about 100 lenders and found a second lien holder that will be able to do this loan.
Wow.
And it was a lot of work. And every lender initially they said yes, 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 but then they turn out to be no, 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 and then all the way at the end, it's like one, two, three, who wants to do it? Yeah, we'll do. We won't. We will. We won't. It was just a lot of phone calls, but we got it through at the end of the day. So my
Wow.
client is very happy, and yeah, so it was a lot of work, but it was it.
But the house looks gorgeous. I mean, this
Yeah.
is like
Hmm.
when I imagine a luxury home, the number one criteria is like you got to have a space for entertainment, right? And
Correct.
this is like right showcasing that
Hmm.
on the cover photo. So this is great.
And feng shui has to be good, right?
Yeah, yes, it'd be good for foreign buyer. Yes.
Yeah. So let me also cover I think let me also cover for you some of the challenges that
Uh-huh.
we have as lenders right now, so you can have some opportunity to think about who you want to work with and how you want to work with those folks. Because with the ever-changing market with higher interest rate, lenders they have no business right now, or
Hmm.
they have very low amount of business
Hmm.
because the interest rate went from 2.5% to like 7.5% in less than 1 year, probably like 9 months.
Yeah.
So right now 75% of all of our activities are on lead generation or following up with people, if we have people to follow up with, or
Uh-huh.
if we're able to generate leads. Why?
Yep.
Because nobody wants to buy homes at these higher rates except for maybe foreign national buyers, and or since I'm a certified divorce lending professional, people
Uh-huh.
are buying or refinancing based on equity buyouts. So I'm still working with those folks, and or people who are going through doing a reverse mortgage
Yeah.
because they rather have no mortgage payment, and I help those folks out as well. But a lot of lenders spend time trying to generate leads that
Right.
they don't know how. And then once they have some leads, they have to compete with all the other lenders, internet banks, trying to quote them a rate. Or anytime
Yes.
when your credit report is pulled, you might be bombarded with 10 other lenders trying to compete for your rates. So it's very challenging market for myself, for every lender in the market, because
Yes, I think
everybody is
along with
always.
that, it's just like, ever since interest rate were rising, we
Mm-hmm,
keep on hearing all the lending institutions, shutting down either some division, iBuyers
mm-hmm,
going out, all these
correct.
things related to the industry, and it is so much more drying up of business. But and I think that's pretty real.
Correct. So then on the other side, we have to look at guideline changes.
Hmm.
because with shutting down banks, some of the banks are and brokers and investors are being more conservative and pulling back. Maybe they were going to lend 80% before, but now they're only willing to lend 75%. Or maybe they were willing to go with 700 credit scores before, but now they want 740. Or maybe, they um, might want to work with folks who are, well, a lot of banks are not lending on investment properties also. So there's a lot of challenges. Then on top of the challenges there, you have guideline challenges for folks going through divorce, folks going
Hmm.
through probate, reverse mortgages has changes, renovation loan programs have changes, and then down payment assistance program have a lot of changes. So you have changes from conventional FHA, VA, jumbo loan, luxury home, commercial, stated interest rate buy down programs all have changes. So this is what we do on a day to day, wearing different hats. But once a loan goes through, once an application goes through, if someone is in contract, we have to solve appraisal problem.
Hmm.
We have title problem to solve. We have support staff that's not working as hard, or underwriters not working as fast, layoffs, and then then somewhere along the way you find a broker that you think they can do the loan, but then they actually use at gmail.com as their email address. So just be conscientious. I would caution folks, if they're working with someone with financial activities, Gmail is not a bank secure site,
Hmm.
which means that your personal financial data, tax return data might be at risk if you're going through a Gmail account.
I see.
So just
Okay.
FYI on that. Not a realtor. A realtor is fine because there's no financial information. But for a lender, I kind of cautious throw it out as a warning. And again, if they're a good loan officer, they may not be an author and they may not be a subject matter. Some are not good loan officer because they're not subject matter expert. But as myself, I just recently wrote a book, so I just kind of call myself a
Yeah,
subject
that's
matter
the one
expert.
I think we wanted to go into.
Okay.
Your book.
Yeah, okay. I can talk about my book first, come back a little bit.
Yeah.
Yeah, so this book I wrote in about 30 days, and then it was published in, I guess, on October 5th. And 1 month later now, on November 5th, it has hit 4 continents already. So kind of like
Congrats.
four.
Yep.
Yeah, thank you very much. So 4.5 months later, I'm kind of still on cloud nine, because this book is now published in Taiwan, Denmark, and Germany, and Netherlands, and Australia, and Canada, and US. So it's like, oh my goodness, I wrote a book, and it's the purpose is to help uh, foster kids and or single parents, to learn new habits so that they can learn to fish on their own and not through, government assistance.
Mm,
And I just got about 500 of these books, and next couple of weeks, my goal is to be able to distribute all these to some of the charities locally, and to kind of put the words into action and really try to help some families out there.
mm.
To learn good habits along the way so that, we don't have to worry about our social security down the road. So, we have good hard workers working, so we'll be covered.
Okay. So I just realized it's about like family and kids and staying on the right side of the habits and stuff. But what's the motivation for you in writing something like this? Was it something like close to you, or how did you get the inspiration in terms of addressing this particular area?
Well, I think back in May and June, well, I guess since November of last year, we kind of saw the rates rising a lot faster than normal. Being in this business for over 2 decades, I have some concern. So how do I set myself apart from other lenders?
Mm,
Is it just to talk to more realtors? Is it, do more social media? Is it do more advertisements so that people know who I am? No, but I have a lot of experience in my life, so I thought I encapsulate all my experience into one book, almost like an autobiography.
mm.
But because when I was 19 years old, attending USC, I sold books and Bibles door to door to pay my way through college. And there were a lot of excellent habits I had learned back then. And
Hmm.
I remember as a teenager, maybe those habits will help other kids if they know how to apply those habits in everyday lives.
Mm.
So I just went ahead and explained a lot of those details. And,
Yeah.
so maybe some kids will learn it. Maybe for hearing it first time, great, but
Okay.
maybe hearing it second, third, fourth time in the future in their life, they might apply it. So at least I'm here trying to do my little bit, and maybe someone else would do more, and empower more kids, more families, more single parents. So so just hoping that this would catch on a little bit further and help each other out. So the next generation matters. So that's my message.
Yeah, that's great because I think I see now why you said last time what I did about something about teaching others, and it kind of touched upon what you
Mhm.
were doing because, it sounds like exactly that was your message, or, you're taking what you had through your youth and sharing with others. And I think that's great.
Okay, thank you. So some thoughts, parting thoughts while we finalize this presentation is, how do you want to purchase a home, right? Do you want to work yourself and, do your own loan? Because some of those folks are always concerned about, give me the best rate, give me the best rates.
Right.
Well, they end up asking a lot of questions from different sources, from the family members, from the loan officer, and then they have to wait for response, compare the response, and then they ask continuous, repetitive, relevant questions. Well, and then after for a little while later, then they go through a different challenge. They have to solve all the little processes, challenges along the way, and they worry they're going to get a loan or not. Then they start shopping rates. I get the best rates. I not get the best rates. And then after that,
Mhm.
then they have to reapply with each lender, and then have to credit repull by each lender because they're not certain, because they're not ready to get committed, and they're not ready to say, okay, I'm going to work with this one lender all the way through. Okay, so and then after a while, they think that the best rate lender equates the best problem solver, and that's never the case. If you just process that through a little bit, which is, if a best rate, if someone has the lowest rate, most likely they are compensated the least with the compensation structure. Then accordingly, then that means they have to do more loans, and they have to spend more time originating more business in order to match the rate, the compensation that they require. So if there's a problem on your loan, they're not going to work on it. They're working with some other person at the same time. So they have to divide their time equally with other people. So sometimes the best rate lender, they may not have a lot of tools and disposal and knowledge and experience in solving problems. So at the end of the escrow period, you might have a lot more drama, lack of disclosures and detail.
Yeah,
Always
this is
choose.
where we say you get what you pay for, right?
Exactly.
Yeah.
So work with a lender broker, and if you get a chance, work with an author that does it all. Right? So um, if a realtor refers you to a lender, maybe that's the lender you want to work with, because maybe they're trusted by the realtor and has some context on the person that they are referring you to. Then complete the online application. Don't worry about your credit being pulled, and just get all your checklist items to the lender within 24 hours. And within 4 hours or so how much you can buy, qualify, and they can just run the show from that point
Mm.
forward. Don't worry about the rates, because the list I had just shown you, there's a lot that the lender is trying to juggle right and left, and making sure all the guideline fits, and making sure that if there's appraisal problem or a title challenge or underwriter challenge, they can solve that for you. And if they are spending, hours and hours with all the buyers who are just concerned about rates, they really don't have time to put your file into underwriting. And you're one of those person that's always worrying about the rates, then guess what? When it's time for your loan to close, they might be working with someone else who are worried about the rates and working on their loan, and your loan is not closing.
Mhm.
So it's a lot of pressure sometimes for a lender trying to juggle all the pieces, but know that all the lenders in this market has your best interests at heart, because we want your referral business in the future. So, stick with someone that you like, trust, respect, and that will be the best game plan for you going forward now or in the future. And you can spot, different situations along the way, how they're solving your problems. And if they're not handling your problems early upfront, you know that they will have drama at the end, and you don't want to have drama at the end. You want to have problem solve and resolve, hopefully within 4 hours. And if you're not getting a response every 4 hours from a lender, maybe that's the time to look at alternative. But give everybody a shot.
Yeah, I think one of the thing that I feel about on that list is when you talked about entering something online,
Hmm.
my personal experience is when I see something like that, I feel like, oh, wait a minute, if I enter something online, is this person going to, reply back to me? Is that really a person or just a, like information collection front?
Hmm.
So I think it would be good that I help you and you also use this interview or other means and put yourself in front of other people because I think, loan to begin with is a very sensitive area.
Hmm.
It's how people acquire their home. And in particular, for like a luxury home, so much is at stake. And every little like variable could impact it to either towards yes or no.
Hmm.
So I
Hmm.
think the person that buyer works with would be like critical. I mean, if I were to do a luxury home, after I introduce the home, after I find out if they like it, after, gone through like negotiating with the seller or negotiating with, whatever that we can put buyer's mind at ease to move forward, then it really is like, oh my goodness, I wonder if the loan is going to close. And
Exactly.
it'll be like the longest wait time and whatever that we can throw into it to help push this thing through beyond the finish line, that would be the primary concern for people
Hmm.
like myself on the realtor agent side. It would be like, hey, once you decide you like this one, now it's a matter of whether you can get the money to push it through the finish.
Hmm. That's right.
So
Yeah.
yeah, I think
So,
I really thank you for all the great answers and for all the luxury buyer audience out there. Joe actually has shown you that he has a lot of problem solving skills. He's a subject matter expert and he's patient with, calling people, 100 of them to find somebody who is going to be on board to, get this thing pushed into the finish line. So I think with that kind of mentality, this is the partner that you want. I would love to show homes and see if you would find something that's attractive enough to move forward. But once you decide, I mean, this is the way to get your financing through. And so, any final words, Joe?
just that the market is changing, and there's what we call interest rate buy down programs that
Yes.
potentially your interest rate can be 1%, 2%, 3% lower on the first year, depending on which program you like to choose. And some even have a 5-year buy down program. So don't be afraid what's being quoted out there, because you can always get married to the house. As we say, you like the house, you marry the house. You just don't marry the interest rate.
Mhm.
You're just dating your interest rate, and the rate in the future it comes down. Then that's when you refinance. Some people think that a home is they have to get the lowest rate. No, because what you want to do is when the
Make
rate
sure it
goes,
closes.
yeah, make sure it closes, because it's like when the housing prices right now are going down, there's a lot more opportunity for you to negotiate on
Yep.
credits from the seller to help you buy down the rates as well, because some seller might be perceiving that the market might continue lower. So this is an excellent time for you to jump ahead and help the seller. I will solve a concern for you, and you have a concern the market will continue to slide. I'll buy your home today. I'll pay you this if you help me with that. Just be in a cordial situation and make the marriage work so that you get the right home, so that you're not paying your landlord 20 to $50,000 in money that they go and pay their mortgage payment. when you are just paying money out of your pocket with no tax write-off.
Yeah,
So,
thank you so much about those because that's what exactly what I tell the current hesitant buyers.
mhm,
Basically, right now it's a great time to buy. You have so many like options to go through, and I think most sellers, if they were not able to sell in the first weekend, second weekend, by the third one and the fourth one, they're
mhm,
so willing to either reduce price or negotiate with the
mhm,
buyer. So, the buy down 3-2-1, all that stuff
mhm,
is great. And if there are other things that buyer wants, just kind of lean heavily on your realtor, on your loan person, and as a team, I think we can help the buyer really get like a dream home with bargain price, right? And then time
perfect.
frame wise, hopefully it's the fastest, but sometimes if the loan does maybe take a little bit longer, but the objective really is to have the dream home that is uh, really great price and all the terms actually the buyer likes. So that's the current market.
Yes, that makes sense.
All
Okay.
right.
Thank you very
So,
much,
yeah,
Michael.
thank you so much for joining me on this. And I'm sure we'll talk to each other more. But hey, so for buyers, thank you very much. And we'll keep on bringing you more things about how to get into luxury property.
Okay,
So,
great. Thank
yep.
you.
Thank
Okay.
you.
All right, you
Well,
bet.
we'll see you again. Thanks,
Okay,
Joe.
take care.
Okay,
Bye-bye.
bye.
Mhm.